How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you Phoenix Annuity and do an honest Phoenix Annuities review, kind of going over the pros and the cons of this and whether or not it might meet your specific retirement income situation. The problem lies in is an individual might have a 401k account. They might be working for a current employer, understanding that now they're getting closer and closer to retirement. Typically, these 401k type accounts, they're involved with some sorts of mutual funds. So kind of think of this bucket, the 401k is involved with some sorts of mutual funds, within that bucket. Meaning that any time, the longer that you've been placing money into this 401k, anytime that the market went up, those mutual funds went up, obviously that bucket grew larger. And any time that the market went down, that bucket grew smaller, or decreased. So essentially what happens there is you have something known as volatility where people start getting a little bit more scared for obvious reasons when they start hitting those retirement years, those later retirement years. What a Phoenix annuity can do, and what this is going to do is kind of explain what a hybrid annuity does. And then I'll tailor it more towards Phoenix, and then I'll talk about some of the cons regarding Phoenix where, Phoenix might be the best route or it might not be the best route. So essentially with this 401k account, there's no real certainty there on whether, if the market wants to go hell in a handbasket, all that money could go down to $0. If you're also adding fees onto that account, if you're trying to pull money from that account, all of this could result in that bucket going down to $0, hence you outliving your retirement savings. So one of the solutions is you could do a well-calculated plan, and this is one of the things that I say at any point in time in this video. Feel free to give our 1-800 number a call. It's 1-800-566-1002. We help implement a plan for you. So if you have X amount of thousands of dollars in your 401k bucket and you understand I'm 60 years old, I want to go and make sure that I'm start pulling money for retirement at age 65 or age 66, say it was age 65, what is the smallest amount of dollars possible that you could roll over, transfer into an IRA annuity through Phoenix or through any sort of company that will produce you a set income stream of, let's say, $40,000 or $50,000, whatever your goal is for the rest of your life or you and your spouse's life. So what a Phoenix annuity can do, and the ones in particular, the hybrid annuities, is it at least puts that certainty in an uncertain world. It allows this money for those 5 years to grow whenever the market's going to go up and not lose anything whenever the market goes down. So you have essentially a safety net. So this bucket that could grow higher or could go smaller when it's just involved in 401k and in mutual funds, if you take a portion of it and you roll it over into an IRA, kind of think of this IRA bucket that now has a little bit of an annuity chassis over it. This annuity chassis it gives those benefits. It gives those benefits of when the market goes down, that bucket is staying preserved and protected. Whenever the market goes up, they're receiving gains into that bucket, making that bucket grow larger. So you're not having that constant swing saying, oh my gosh, if I take out too much money, if the market crashes too bad, then I'm not going to have anything there. So the way that this works is you want to make sure that this calculation is precise. If you go and you have a portion and your goal is, let's say, $50,000, what's the smallest amount of dollars that you would place into a Phoenix annuity at age 60 that will provide a sort of income stream, a sort of income guarantee, and it's guaranteed by the claims paying ability of the Phoenix insurance company that will produce that $50,000. And this is essentially where an income rider comes in. Okay, and this is what makes it hybrid. That type of program that allows you to gain whenever the market goes up and not lose anything whenever the market goes down, that's known as a fixed index annuity. When you have a fixed index annuity with an income rider attached to it, that's what allows you to say, okay, at age 65, rather than surrender that full bucket of money to receive a set lifetime income stream like annuities used to do in the past and why they had such bad press in the past, now annuities have morphed. They became a lot better. They have these income rider benefits there, where it says rather than take it out in the form of annuitization, which is a horrible way to take any annuity out, you're going to play by the rules of the contract and you're going to take it out in the form of lifetime income. Meaning that at age 65, you could either take out a portion of whatever your remaining account value is, or you could trigger your lifetime income stream, and that would be income that would go to you and your spouse for the rest of your life. Every year that you pull out money, it's going to decrease your account value year by year by year, But anytime the markets goes up, your account value is also being increased. So what we're doing there is we're eliminating the downward market losses that you would experience with certain mutual funds. We're eliminating those mutual fund related fees. And when it comes time to pull out money from that account, even if this account gets dwindled down, dwindled down, dwindled down, and it hits $0, the insurance company is still on the hook to pay you that lifetime income stream. So you're able to leverage your chips in the correct direction to have your peace of mind that you're having this personal pension type income come to you, and you're also having preservation on your physical money at the same time. The reason why this is important is because if, let's say, you're taking out lifetime income, lifetime income, lifetime income, and there's still something left into that account value bucket, still something left into your retirement bucket, well, that's what could get passed over to your beneficiaries in a lump sum. So they have different things known as income riders or death benefit riders that you could attach to these Phoenix annuities. So let me actually pull up a new screen. So we understand the benefits are that a Phoenix annuity with an income rider, specifically with an income rider, can give certainty in an uncertain world. Now, the cons to it are many times whenever I experience, because we basically deal with national volume, meaning that people give our 1-800 number a call anytime they're interested in certain annuity plans, certain retirement income planning to see, which products would be the best one for them, which plans would be the best one for them. We have a proprietary strategy known as the Retire Sharp planning system. And what it does is it filters out all the best annuities out there. So it might have Phoenix annuity. It's going to have thousands upon thousands of different scenarios, different products, different companies, many different things in there. What I've noticed is many times Phoenix annuities is not going to be the number one route. So in order for a Phoenix annuity to come out in first place, when you're going through thousands of different scenarios, that person has to be in the correct state that offers the best Phoenix annuity, because each state is going to have their different variations. Some states have the same exact type of annuity with Phoenix annuities, other states don't. Also, the age group. If you have a client that's age 60 looking to turn on income at age 65, you could have company ABC that have a much better product than the Phoenix annuity. Companies A, companies B, company C, those are three different companies that have a much better product than the Phoenix annuity. But if you're age 72, looking to turn on income at age 75, maybe Phoenix annuity might be better than all those different companies out there. The thing that I want to try to hit home is understand that you do not have to make that mistake. You do not have to be forced into a Phoenix annuity or into any sort of annuity for that matter if it does not suit your specific situation. You want to make sure that you're getting an honest review, that you're having someone work with you for your best interest in mind. Making sure that, and this is one of the major reasons why we have a lot of national volume, is because you could call our 1-800 number up at any time. We have 24/7 customer service. We are A+ rated on the Better Business Bureau, but most importantly, we have the Retire Sharp planning system. So when giving us a call, you say, hey, listen, I saw the video on Phoenix annuities. I want to deal with a specialist, and that specialist is going to ask you a whole slew of questions. They're going to try to see, okay, well, first off, is an annuity even correct for your position? Because an annuities are right for the right person and very wrong for the wrong person, because you have certain restrictions. You have certain restricted liquidity with annuities, or some annuities are set up where the death benefit's not favorable. With Phoenix annuities, what I've noticed is they have a lot of high income rider fees, which I do not like. One of the things, and there's a couple of different things that always sift through my mind and with my personal clients, is I say, okay, is it a 10-year product? Is it something that is going to be less than 1% in income rider fees? What exactly are the cap rates? What are the spread rates? What exactly happens with the crediting that happens to that account value side? Is this the number one highest lifetime income that they could possibly have for themselves or them and their spouse? And that's the analysis that has to be met so that you understand with pure confidence, you're placing your portion of dollars, whether that's in an IRA account, a 401k account, a cash account, to produce that income stream, that you're doing it the correct way. Phoenix is a good company. I've had very good standing with them. I've, all my clients that have Phoenix annuities are happy with them. But what I've noticed is majority of the times, Phoenix annuities are not going to be the number one option. And therefore, if it's not the number one option, you shouldn't go with the number one option. I mean, you should be going with the number one option. And not, basically be square peg in a round hole if being forced into a Phoenix annuity, all because an advisor is trying to tell you all these great things about a Phoenix annuity. So just be very mindful. At any point in time, feel free to give our 1-800 number a call, and we'll walk you through this process. If Phoenix Annuity is the one that comes back for your specific situation, we're going to recommend it. If not, then we're going to recommend something else. But at the end of the day, you want to make sure that with retirement, you don't get any second chances. You want to make sure that you're doing it correctly. You want to make sure that you have good advisors in your corner. They have a good company in your corner that's educating you the right way, so that they're not just explaining things to you, and then you have so much information, but you're being proactive with it. You're being acclimated to the process so that you know for sure what every dollar of your retirement is doing. And that's one of the things. This is one of the reasons why I started the company, and why we've had a lot of raving fans and a lot of national volume. To put it lightly, a lot of national volume that people keep calling in is because they want to make sure that they're dealing with ethical, with ethical representatives, and they want to make sure that they're being dealt with the correct company, the correct position, for their needs. So thank you very much for watching this video. I hope you learned some things, and I look out for your phone call, or at least dealing with myself or one of the representatives of my company. Thank you so much.